Okay, we're underway. Thank you for being with us today. I'm Peter Towers, the Managing Director of ESS BIZTOOLS. Welcome. Well, we're going to be looking at the first product package within ESS BIZTOOLS. So this is the advisory intro package, which has been introduced to assist bookkeeping and accounting firms to offer services to SMEs, but also to charities, not-for-profits, and sporting organisations. So it's a wide group. Why? Why do we think that bookkeepers and accountants need this sort of advisory service availability? Well, it's to improve your client's business operations. It's tough going running an SME at present in Australia, and probably in most parts of the world, but Australia's got a high inflation rate, high interest rates, and we're all still getting over the effects of the COVID virus. Businesses need assistance. They need more accounting input than they've previously been able to acquire. Also, some businesses are able to scale up, even with all the difficulties, and they really need ongoing assistance. They need a chief financial officer service, but most of them cannot afford to pay for it. And that is where bookkeeping and accounting firms come into play by being able to assist in the delivery of those services. So that's the general overview that I wanted to give you at this stage. I'm now going to go to our website, whereby we can bring up some other information which will enable us to identify the key components within the advisory intro package that I think you might find to be of interest. I've gone on to the ESS BIZTOOLS website. We have 4 packages, starting with the advisory intro, which is our brand new package that hasn't been fully uploaded yet to our website. We are working on that and it will be uploaded in the next week, but there's plenty of information available already. The next level is the starter package. These 2 product packages are really targeted at bookkeeping firms and accounting firms who have not previously offered advisory services. So if you're in those categories that you're thinking about offering advisory services, I believe we really have the product package for you to assist you on getting started into this interesting and exciting world of offering more services to your clients. And many of your clients really need that assistance. The advanced package is all of the ESS BIZTOOLS material, except for a little bit on Board of Advice and Company Directors role. It includes everything else, including the Chief Financial Officer Service package. And all that is then rolled into the financial forecasting package with some material on Board of Advice and Board of Directors operations. But then with the Plain Guru software package, which is, I think, the leading software package for accountants to offer budgets, cash flow forecasts, projected balance sheet work for clients. It's developed by an American accountant, and now that business is run by his son. And that company is supported in Australia by a fellow of the Institute of Chartered Accountants, Paul Barnaby, who conducts the training. Now, the big benefit that we've secured for our subscribers in Australia is that on the Plain Guru software, you get access to the software to use for 10 of your clients at any one time. The normal access limit imposed by Plain Guru is only for 3 firms. You can access more, of course, but you pay them a higher subscription level. So that's the packages which we've got. And on the left-hand side, you can see the package names that are just summarised there. And here in the middle is the little banners which we've got, which highlight every product package within ESS BizTools. Now, you only get all them if you're subscribing to the financial forecast package. You get 95% of them if you're subscribing to the advanced package. The starter and advisory intro packages receive less, plus the subscription is substantially less for those areas. I'm going to use the starter package configuration because we haven't installed the advisory intro package yet. That will be done shortly, but I will be referring to and bringing up the products that are actually included within the starter package. Where all this starts, though, is undertaking a due diligence review. This is very important because I've found, and I've been both a chief financial officer of a listed public company and also senior partner in an accounting firm. And then for the last 20 odd years, in fact, longer than that, 25 years, a consulting contractor, undertaking all sorts of varied accounting, company secretary, company director, board of advice member type work. And what I've discovered is that accountants who are doing annual accounts and tax returns know a lot about their clients when it comes to their taxation affairs. And they've got a working knowledge of how the financial accounts are prepared. But I don't think, in all honesty, you really know your client. Bookkeepers, you're involved more at a grassroots level and probably have a good idea of what is happening daily and weekly, a lot more than what a lot of accountants would have. But again, have you been to the client's premises? Have you analysed how they do things? Have you identified the problem areas from an internal control point of view? Do you understand how they purchase and get delivery of products, how they check it in to make sure that they're receiving what they're paying for? Have you analysed the debtor system? Are they installing the due date for payment of an invoice on the invoice very clearly? Are debtor statements prepared and sent to the clients, preferably by email, within 24 hours of the end of a month, so as to try to reduce the debtors days outstanding? If they're dealing with major mining companies and other major corporations that have said all material must be lodged with them within 8, 9, 10 days at the end of the month, have their systems been implemented to ensure that that happens? Because over the years, I found situations where one business is getting paid very close to 30 days by a mining company, and yet another one is taking 60 and some stage nearly 90 days. Why? Well, when I reviewed it, I found that the second company, the one not getting paid regularly, is because they're not lodging their data correctly within the stipulated time. So that's one of the things that you might put your finger on when you're undertaking the due diligence review. I believe what you need to understand the business is, in fact, 1 inch wide and a mile deep. So that you really understand how the business operates, who the key people are, where the weaknesses are, where the potential problem areas are. Your client might be getting all their supplies from one source in an overseas country that could be subjected to problems because of the wars that are currently being fought and the interruptions that is causing to shipping schedules. What would happen to your client's business if they couldn't get supplies from that supplier in Ukraine or parts of the Middle East around Israel? What would happen? Should they be thinking about sourcing from another site in South America or Asia? Now, these are critical questions that if you were the CFO of a public company, you would be required to be the one thinking about and raising these issues with the leadership team, discussing them and coming up with suggestions. If you're going to be offering this advanced advisory role, which we call the CFO role, I would urge you to be thinking about a whole range of broader issues relating to your client's business than just the preparation of the annual account and the income tax return. Or if you're the bookkeeper, that's the preparation of a very nicely reconciled set of books and the computer postings, the profit and loss account and balance sheet. But it's the analysis of these documents that's important. Do you know the debtor's days outstanding? Are you bringing that to your client's attention? That 3 months ago it was 48 days and now it's 63 days. Why has it gone up? What's gone wrong? Have the debtor statements not been processed promptly enough? Has someone stopped putting the due date for payment on the tax invoices going to the supplier? Has the person who was making the phone calls the day after the due date for payment not doing it anymore? Or has that person gone on holidays or left and no one else wanted to do it? So it hasn't occurred. Yet suddenly debtor's days outstanding is blown out. What effect does that have on the company's bank account? These are the questions that wearing your CFO hat, you would be very conscious of. And that's what the advisory service role involves. And I would really urge you to be thinking about this. In the advisory intro package, we supply some overviews of the predictive accounting process, budgets, cash flows, key drivers, and cash flow forecasts and projected balance sheets. Now, these are very important. You're not getting the full package. Our subscription doesn't enable you to get the Plan Guru software. You could access the Plan Guru software through ESS BIZTOOLS if you wish. We have a special deal, but that is not in, that would be in addition to the subscription package if the package you were taking was just the advisory intro package. Of course, you could upgrade your subscription to the full advisory package, but you would have to talk to us about that. So within the predictive accounting process, our general notes, first of all, talk to how you budget for the business. Our strong recommendation is if your client's got 2 or 3 branches or parts of the business, so that there's a warehouse, a couple of retail shops, a service centre, and the office, that each of those should have separate P&L accounts prepared. I'm a firm believer of narrowing the business units down to the smallest possible unit and then preparing profit and loss accounts and giving them to the person who's responsible for the direct management and then to the supervisor, which might be the area manager, the owner, or whoever. When you put it all together in a consolidated form, so you put the office, the production centre, the 2 retail shops and the service centre all into one profit and loss account, you lose the ability to really analyse the performance. And I found when I was the public company of CFO, that's how we operated. And I found a lot of other companies do exactly the same thing. The big end of town, narrow it down to small business units, just like they were a group of SMEs, so that they can get the individual accounts. At the end of the financial year, of course, you consolidate all that. And the company I was with had over 400 business units. We consolidated all that and produced an overall profit and loss account, which to analyse it was very difficult because in our case it included some very large meatworks, some livestock operations, retail butcher shops, retail small goods shops, cold stores, all put together. They all got different KPIs, different gross profit percentages, a whole range of things. It's all just consolidated in together. If you're really going to be able to advise your client, you need to break it down, because businesses can get into real trouble when everything's consolidated into one profit and loss account and suddenly there's losses appearing in the bottom line. And the question is, well, what's causing the problem? I had reason to undertake an appointment some years ago that was a big problem, because suddenly a loss of a considerable sum of money had emerged out of a business. It actually had 14 business units and there was one profit and loss account. Thank goodness the bookkeeper had kept the sales figures separate, so we knew what the sales figures were for each of those activities. So through some interpolation and good guesses, and by working out where people worked, we were able to allocate a lot of we knew the sales, we were able to work out the purchases based on what they were, and we knew where the people were employed. So we got a lot of it right, but it could not hide that there was a problem in a particular area. And it was the CEO's favourite area, which was quite an issue. He was not very impressed when I told him one night at about 8:30 where the problem was. But when we examined it, we found there was a reason that this had occurred, but everyone thought someone had told someone else about it. There'd been a change made, the travelling distance was considerably longer, they were using a fleet of trucks to do this, and no one had bothered to tell the boss. There'd been a change made in the distribution network, therefore the costs were a lot higher. That's how, but it was all being hidden because it was in one profit and loss account. And they traded for a couple of months. I said, oh no, those accounts can't be right this month. And they did it again next month. And they said, oh, well, we better start examining this. So this whole thing went on for about 6 months before finally they approached my firm and asked if we would analyse it for them. And that's what we found. Now, I'd always been a strong supporter of individual P&L accounts for every business unit prior to then, but after that, I was nearly fanatical about it, because that problem would have shown itself under the system we're now proposing in the first week, but most definitely in the first month after it occurred. And that brings me on to weekly information. Big companies get weekly information on every one of their business units. Woolworths do it on their stores. The Woolworths manager that I talked to had 42 sections. He had 42 section heads running all sorts of things. And a lot of those sections were competing with businesses probably not 50 to 60 metres away from them out in the shopping arcade that they're all part of. The butcher shop, the hot bread shop, the cake manufacturing business, the fruit and vegetable business, all of those, they're all in Woolworths and Coles and IGA. And yet they all know by Monday afternoon, Tuesday morning each week of their trading results per department, per 42 departments. So that's what we're introducing in the advisory intro package for you to start thinking about this and making sure the systems are set up so that weekly P&Ls, estimates, can be prepared for every one of your business. Now, before you throw your arms up in the air and say, oh, that's all too difficult, think about it. You know your sales, or you should know. You know your wages. You know the fixed costs like rent. Advertising might vary, but if there's been a big surge in advertising this week, will you adjust your budget estimate? The rest of it, you work off your budget. And this is why budgets are so important, because what you're able to then achieve, if there's been a problem, like the problem I just recounted, if that business had been undertaking a weekly profitability estimate for its 14 operations, they would have got a loss staring them in the face in that first week, probably of about $10,000 would have been staring at them. And they would have said, gee, we thought we were making $5,000 a week, and then suddenly we're losing in that activity. In fact, it was probably more than $5,000 they expected to make. So it was a significant turnaround. You would act, wouldn't you? There'd be bells ringing. What's gone wrong? What's the problem? in the retail butcher industry or any sort of retail industry, your gross profit percentages is one of the big indicators that something is not quite right. Now, this is the way your team have to think and act if we are going to be an effective advisory unit for your client. ESS BizTools is going to write the material. We produce videos like this. I'm happy to talk to you about any of the issues you come across. But you have to activate it with your clients. You're going to talk to them. We've given you a lot of material in the system, or you will have when you become a subscriber, that will help you convey to your client the role you can really play. They are getting the benefit of technology, because today you could do it and communicate with your client by Zoom 10 times a day if you want to keep in touch with what's going on and really act as the CFO. But you might undertake that role for 10 clients. There's an ESS BizTools subscriber that is acting for about a dozen clients in a CFO role. Another consultant has told me. So you can do that service. And in that particular practitioner's business, her other staff are attending to the routine work of preparation of the tax returns and some of the other things that need to, and helping her on some of the advisory service role, because the role's grown. The word's got out that she can help these businesses achieve their results. And then we go into the monthly financials. Weekly, hopefully the problem, if it exists, has been identified and fixed. That's the real benefit, fixed. That should have been known in the business I'm talking about no later than the Tuesday for that week ended. I suggest that would have been fixed by Wednesday or Thursday. Instead, they traded on and lost a lot of money because no one had told someone. It would have become very obvious. Weekly performance report had been prepared. But then we go to the next set of gates to try to ensure that our clients are getting the right information and they're not losing money. And that's the monthly financial accounts. They're very important. I know they've got nothing to do with the annual tax return, but they are vital for the client to be getting them and for you to be analysing them. And it's just not a matter of producing a profit and loss account and a balance sheet. What's then required, and this is per business unit, is to compare the profit and loss account to the budget that's been prepared for that business unit. What are the variations? And to then investigate the variations. Because if my other client, which was a special purpose job, they were not my client, I was brought in as an expert to sort them out. If they hadn't done their they were not on the weekly cycle that I just referred to, which I wish they had been, but were on a monthly cycle comparing back to a budget, and they analysed the profit and loss account, they would have quickly found that something had gone wrong. The revenue was down. Expenses were high. Profitability didn't exist. And yet they traded on month after month after month because they were not doing the monthly financial accounts. And this was a business with a turnover up around $20 million per annum. And we're not doing monthly financials. At the end of the year, the accountant put it all together and basically prepared a tax return. In this day and age, it's not good enough, and there's no excuses in this day and age, because we've got the computer software and technology, and we've got the communicating technology, what we're doing now. I'm using Zoom, but there's other products that you can use. So we see that the key part of offering advisory services is the 52-week of the year business enhancement system. And that's the daily reports, which I didn't mention in that, but that's what happened today. The weekly performance and profitability report, which is very important. And the monthly financial accounts compared back to the budgets, which is extremely important, I think. So let's have a look now at a few things that are contained within these packages. So I've gone back onto the package that I wanted to start with. And the first thing I want to do is go to research and development. Research and development is an important area for your clients. What you have on the screen is the summary of what's included in the research and development introduction area. And in particular, I just want to show you the flow chart so you get access to all this material. So the idea is, if you're identified that the client is in a business activity that could relate to a share that again. So what we're showing on the screen now is the planning a research and development project. This is a flow chart that you could utilize to talk to a client who's thinking about offering research and development, or you may have identified that they've been doing some research and development activities. There is some substantial benefits if they've completely identified research and development. But it starts with an idea, then it could become a project. There could be a small reference team appointed by the boss. They need to do some preliminary investigations and they need to determine their eligibility. And notice we've got links here to papers. These are papers we have written, which you can then click on and show the client. And you got all this material as part of the admin advisory. Then we raise with them this concept of prior art searches. Yes, it is required. They need to be able to do it. So we explain why and how it's done. They need to keep documents of the searches they've made for prior art searches. We need to identify the core activities that's proposed in the project. And we got the links to BAS forms, that's Business Advisory Services forms, which give them the detail of what's got to be looked at. They need to identify the new knowledge to be produced. So again, we're explaining it. It's been explained for you and your team so you clearly understand it, but also for your clients. So what we envisage is that you could talk to the client and give them some initial knowledge on research and development. And you then need to make a decision. Are you wanting to go with your client for the whole journey, which is through to the lodgement of the research and development annual declaration, which has to be lodged with Oz Industry by the 30th of April each year? That's 10 months after the end of the financial year. Or are you then going to refer your client on to someone else? It could be to the accountant if you're the bookkeeper, so we should really be going to talk to your accountant. But here's some material we're going to give you so that they understand they have to be a company. They have to spend more than $20,000 on legitimate research and development in the financial year. They have to keep records. They have to do this prior art searches. They've got a better idea of how it all works. But a lot of people do it. So, but if you are an accountant and you don't want to do it, you could refer them on to someone else you know does it. Now, that might be a Big Four firm, or you could say, no, I don't want to send them there, and they won't get the right service. You can contact me, and I will either refer people to you or our consulting business could look at taking it on. But you can do something to show your client you're proactive about this process. So that's the way that the research and development activities work for the benefit of your client. I'll just go back into the members section. I went back too far there. So The next one that you might be interested in could be, and I'm going to bring up a paper now, so I've gone to our library, sections and papers. And these are the sections. There's about 65 of them in total. The advisory intro subscriber gets access to about 50 of them. So we're looking for government grants and assistance. So I'm going to click onto there. And I'm going to show you the Export Market Development Grant. And there's some preliminary information there, and we can bring it up onto the screen. And just to make sure that everything's working okay, I'm going to share that. So this is a paper which looks at the Export Market Development Grant. This is a grant that's available for exporters in any type of business category, so sole trader, partnership, trust, company, with turnover less than $20 million in the year, who have been undertaking export market activities. So they've been spending money in overseas promotional activities. But it could also be expenditure that a Australian-based business that's supplying services in Australia to overseas residents. It could be a reef charter business that takes people out to see the barrier reef. It could be wild water rafting business. It could be an accommodation business that's promoting itself to overseas residents. They can also claim the Export Market Development Grant. There are 3 tiers to it, and they're summarised. Tier 1 is someone ready to export. Tier 2 is someone that's already exporting or seeking to expand. And the other Tier 3 is exporting eligible product, and they want to make a strategic shift. And over a 3-year application process, a total of $770,000 could be paid out by the government. And those 3 years do not have to be consecutive. People can do a bit and come back and do a bit more, sort of thing. So that's the Export Market Development Grant. We have a summary of that, which is available under the advisory intro package, which would give you information to be able to comment with a client as to how this process works. So the membership subscription for the advisory intro package is $900 plus GST for the 12-month upfront subscription. That's a total of $990. Or you can pay monthly. It will cost you a bit more. 12 monthly payments of $99, including GST. The membership of this package, advisory intro, gets you started on this journey of offering advisory. If you decide sometime during the year that you wish to upgrade, if you want to get the full research and development package, or you want to get the Chief Financial Officer service package, you can upgrade your subscription to whichever level you want it. We have bookkeeping firms utilising all 4 packages, and we have accountants across the same package area. It's up to you what you want to use with your clients. I believe that if you use the packages on a very proactive manner, you will earn a very attractive return on investment from your investment in this series of product packages to help you offer advisory services for your clients. You might also be interested in the starter package, costs a bit more, and these are special prices available under the 7th of May. The upfront subscription, including GST, is $1,980, or 12 monthly payments, including GST, of $198 a month. Or the advanced package might suit you a bit better. You get a lot more material. You get basically all of the ESS BizTools material for an upfront payment, including GST, of $5,940, or 12 monthly payments of $594 per month, including GST. Or the financial forecasting package. This is the overall package, which includes the Plan Guru subscription for 12 months. So the 12 months subscription up front is $10,560, including GST, or 12 monthly payments of $1,056, including GST. So these packages will each make a contribution to helping you to be able to better service your clients. You can also receive group training. We have group training available for each of those 4 product packages of 10 sessions for each package each year. And if you're in one package and you wish to attend a training session for the other package, you can do that for no extra charge. The firm could also elect to have us undertake training on a one-on-one basis with your firm. You'd be required to pay a fee of $330 per hour, including GST, and we would offer that training to your firm. So to subscribe to ESS BizTools product packages, please go to www.essbiztools.com.au, click on packages and pricing, and then click on the product package. If you've got any questions, please contact us. And if you want to participate in a Q&A session for the this package, advisory intro, please know that there's a session on the 18th of April at 5 p.m. Please go to our website, www.essbiztools.com.au, to register. Thank you very much. Have a great day, and we'll talk to you in the near future, I really hope. Thank you. Bye-bye. Okay, bye. Thank you very much for being with us, and we look forward to hearing from you. Goodbye.